Hundreds of thousands of policies canceled.
Insurance here in the state of California is dysfunctional.
People paying more for less.
I'm completely not covered for any kind of fire that happens.
The issue growing.
People can't afford to have the most valuable thing they own.
With no simple fix.
This is a long-term game.
This is California's home insurance crisis, a to-the-point special investigation.
Thanks for joining us. I'm Alex Bell. If you ask any community in California, they will tell you affordable, comprehensive home or commercial insurance is hard to find. Insurers are limiting business or leaving the state altogether. They blame a changing climate, inflation, and government regulation. Over the next half hour, we're hearing from Californians struggling with their policies. We're also questioning elected officials about what they're doing to help. First, ABC 10's Becca Habegger shows us the extent of this crisis. She has been following it for 5 years now, and the problem has only gotten worse.
Nestled in the Tahoe National Forest, you'll find the Nevada County Gold Rush era town of Washington.
I love the community, I love the river, I love the history.
Charity Jackson has lived here for 25 years. In 2017, she and her husband bought the historic Washington Hotel, perched above the South Yuba River.
I don't make a killing, I make a living, and that's okay because I get to work here every day. Like, this is my job and this is my view.
But this view is getting harder to afford. Charity's commercial insurer dropped her in 2019. She says her only remaining option was the California Fair Plan. The state-mandated, high-cost, bare-bones insurer of last resort is now hundreds of thousands of Californians' only resort. In 2019, just under 160,000 people were on Fair Plan residential and commercial policies. In June of this year, that number stood at nearly 420,000.
I just call it California unfair.
In 2020, when Charity switched to the Fair Plan, her annual premium cost nearly $11,000. That's more than double what her last insurer charged. Then in 2023,
the total for the renewal was about $33,500. And so I thought it was a mistake when I opened it, and I just cried.
That's nearly $33,500 just to insure the hotel for 1 year against fire damage, with a $1.5 million limit, not including extended coverages like water damage or liability, which she has to purchase separately. She filed a complaint with the Department of Insurance, which upheld the Fair Plan's assessment.
In order to pay that 2023 California Fair Plan premium, Charity held a fundraiser here at the Washington Hotel, as well as another one in Nevada City, and a friend started a GoFundMe campaign for her.
Then, in 2024, her Fair Plan premium rose to more than $62,000, half of which was a brush surcharge for nearby dense forest outside her property line and outside her control.
I would maybe hire a person to just be my personal fire person for $62,000 a year.
So she opted to go without fire insurance for her business.
You're just at this point, you're spent.
Defaulted to mortgage insurance, which is about $7,000 a year. And that's great because I get to keep my business, but also it's a huge risk, right? Because now I'm completely not covered for any kind of fire that happens.
Charity held another fundraiser this year, only this time to buy a sprinkler system and pump to pull water from the river during a wildfire.
I get routine calls from homeowners saying, hey, I just got canceled. What do I do?
Mike Stewart, a veteran firefighter with 35 years of professional experience, is the chief of Washington's 8-person volunteer fire department.
What do you think an insurance company sees when they look at a community like Washington?
They see high liability.
Do you think that's fair?
Well, yes and no. You got to look at what is. They're in business for a reason. When they look at the fact that we're in a high severity fire area, they're looking at that as a high risk, and it realistically is.
You can't legally force somebody to operate at a loss, and they'll have to go. They'll be forced out of the market.
Seemingly prophetic words from 1988, days after 51% of voters passed Proposition 103 to overhaul California's insurance regulations as car insurance premiums were rapidly rising due to inflation.
If I don't have insurance, I can't drive my car.
Prop 103 created the elected position of the California Insurance Commissioner. It requires insurance companies to get permission from the state before raising rates, and insurers must provide data justifying their rate hike, which the Department of Insurance reviews over the course of several months. Insurance companies sued to block Prop 103.
It's impossible to make a viable business out of it.
Prop 103 survived its legal challenges and continues to govern insurers doing business in the state.
However, Prop 103 was well-intentioned. The long-term effects have been traumatic and in some cases extremely detrimental to the consumers that it was designed to protect.
Today, insurance experts say companies are leaving California in part because the rate approval process takes too long, sometimes more than a year, with too much red tape, and their rates can't keep pace with the rising cost of doing business, leading to fewer options and higher prices for consumers. At the Willow Steakhouse,
How you doing? Okay?
Mike Byrne has never met a stranger.
This is Brendan and Margaret.
This historic roadside saloon and steakhouse flanks Highway 49 just west of Nevada City, taking on various shapes and names for more than 75 years. Mike Byrne and Nancy Wilson bought the Willow more than 20 years ago. They're now in the process of selling it, but the new owners will need a new insurance policy.
That's the only holdback right now.
Mike and Nancy insure the Willow through Farmers Insurance.
2 years ago, we were paying $9,000 a year. Then last year, $21,000. This year, $37,000. Do you know how many dinners you have to sell to make $37,000?
Mike and Nancy are at least grateful they haven't had to go to the fair plan.
I'm told that I'm very fortunate, should be happy to write a $37,000 check. Insurance here in the state of California is dysfunctional.
What do you want to say to decision makers in Sacramento?
Hey, let's get this done. We're suffering out here. Help us, please.
This crisis is also impacting people in the suburbs. Many of you have told us about unexpectedly losing your home insurance. ABC 10's Jeannie Nguyen explains what happened to some families and what you can do if your policy is canceled.
We love this neighborhood.
It's this Folsom neighborhood where Tammy and Brian Sommers say they bought their perfect home 6 years ago. Without hesitation, they picked Kemper Independence Insurance Company for their homeowner's insurance.
I was a homeowner before this, and I had Kemper Insurance. Fantastic company. Never had an issue, never had a claim.
But 3 months before their policy renewal, they got this vague letter from Kemper saying, "We will not renew this policy when it expires." Kemper provided the Sommers with possible next steps, including an option for the California Fair Plan.
I went in a little bit of panic mode. You know, homeowners insurance, everybody should have it.
In 2023, the California Department of Insurance said Kemper Insurance issued more than $1.5 million in refunds to California homeowners after the department found the company overcharged policyholders for wildfire risk. Later that summer, Kemper stopped offering home insurance in all states.
I lived in this house for 4 years.
In the heart of South Sacramento, ABC 10 employee Gerardo Cabral and his husband David are proud to call this place their own.
We just felt it was nice. It was a good opportunity.
The couple chose AmGuard Insurance Company for their homeowner's insurance. Before they dropped you, had you made any claims?
Oh no.
No issues ever?
Never.
About 10 months before their policy renewal, Gerardo received this letter from AmGuard saying they are no longer writing policies in California. AmGuard says policies were canceled in 2024 because they no longer rate any insured policies in California due to wildfire risk.
These families in a suburb like this are not alone. At least 7 of the state's property insurers, including big companies like State Farm and Allstate, have either left the state of California or are only offering limited coverage.
With non-renewals, with rates going up, it just means our team has to work harder.
Tony Bizzuto has 20 years experience as a broker. He started noticing large changes in the market during the COVID-19 pandemic.
There was a huge supply and demand situation, an issue, which caused problems on the insurance side because when they're adjusting claims, when they're having to rebuild homes, repair cars, which resulted in inflation and drove the cost to adjust a claim up.
He also blames the California Department of Insurance for its model for how insurance companies predict losses. calling it out of date with the increase in wildfire damage in the state. Insurance companies have turned to drones and satellite imaging to measure risk, resulting in increased rates. Bizzuto says the likelihood of being dropped may be less if homeowners keep their homes up to date.
So that's one thing that companies are now looking at is what brand electrical panel do you have? Because if it's an old one, it's a certain brand, they don't want it.
As for the Somers and Gerardo Cabral, they have found new policies with new insurance companies, but it comes with a higher cost.
We asked Kemper Insurance how many policies they canceled and if they plan on writing in California again. We were directed to a 2023 press release announcing the company's plan to stop offering home insurance. AmGuard never returned our requests for comment. The home insurance crisis stretches beyond state lines. Over the last 5 months, To the Point sat down with local House representatives asking, is it time for the federal government to step in? I spoke to 9 California Congress members, 4 Republicans and 5 Democrats. Not all see eye to eye on the causes of the crisis and possible solutions, but all agree that a fix is not simple.
From creating a federal program for insurance companies,
People can't afford to have the most valuable thing they own, their home,
to clearing more forests.
We have to restore proper management to our public forests.
And incentivizing taxpayers to make their homes safer.
Giving individuals tax relief.
5 of the 9 Congress members ABC 10 spoke to recently introduced bills targeting the home insurance crisis and the issues contributing to it. Congressman Adam Schiff authored the Insure Act. The bill focuses on reducing disaster risks through grants, expanding insurance coverage, and stabilizing reinsurance, known as insurance for insurance companies, by creating a federal program for insurers.
Insurance companies can buy reinsurance from the federal government at a reduced price. The federal government doesn't have to earn a profit on it. The prices would be less erratic. That means that insurers would be able to afford to insure California homes at more reasonable prices.
Insurers say rising reinsurance prices are adding to higher costs for consumers. In exchange for helping insurance companies, Schiff says the Insure Act would require insurers to insure homes for all natural disasters, including wildfires. Schiff's office says the proposed federal reinsurance program would be paid through premiums that insurance companies pay. But is the Insure Act a solution?
Reagan said it best, the government is not the solution to this problem, government is the problem.
Congressman Tom McClintock believes Schiff's bill would only create additional problems.
It takes us in exactly the wrong direction, and we can see that because we can see the failures of the flood insurance program over the years.
McClintock doesn't believe climate change is the issue impacting the insurance market, but rather the country's environmental laws.
The National Environmental Policy Act, the Endangered Species Act, that have made the management of our forests endlessly time-consuming and ultimately cost-prohibitive.
In 2023, McClintock introduced the Proven Forest Management Act to extend a policy that already exists for the Tahoe Basin. He says it would streamline the permitting process for forest thinning projects in the National Forest System.
I'm on the Natural Resources Committee where a lot of this takes place.
Like McClintock, Congressman John Duarte believes thinning our forest will help with the issue.
California has unhealthy forests. We haven't actively managed our forests for decades now, and so we're seeing catastrophic wildfires.
We can give homeowners an incentive to harden their homes, make them more fire resistant, while at the same time giving them financial relief if they choose to do so. I think that's just common sense.
Congressman Kevin Kiley's district is home to 5 national forests and the devastating Caldor Fire. In 2021, the Caldor Fire near Lake Tahoe destroyed more than 1,000 homes and caused $1.2 billion in damage. Kiley says his bill, the Safe Home Act, would offer a tax credit to homeowners who protect their property from wildfire, known as home hardening. That includes clearing vegetation and using fire-resistant building materials. Based on your income, homeowners could receive a 25% tax credit capped at $25,000 a year.
I believe there are some things we can do at the federal level.
Congressman Mike Thompson authored the Disaster Resiliency and Coverage Act. The bipartisan bill creates state grant programs for eligible homeowners to receive up to $10,000 for disaster-resistant improvements and gives a 30% tax credit for larger property owners and businesses.
We found that this program works well. experience with it in Alabama because of hurricanes there.
The bill would also stop states from taxing payments from state-run disaster resiliency programs and various federal programs. Congressman Doug LaMaffa is a co-sponsor of the Disaster Resiliency and Coverage Act. The Camp Fire, California's deadliest wildfire, was in his district.
That'll be very important to shield people from being taxed on damages that were awarded to them for being basically fire victims.
Congressman Josh Harder is another co-sponsor of the Disaster Resiliency and Coverage Act. Harder says it's time for the federal government to step up.
We need these short-term fixes to move forward, which is what the Disaster Resiliency Act and other bills are trying to do.
Congressman Ami Bera says Congress has to be proactive to address the insurance crisis, but says it will take time.
In the short term, I think it is going to be the states that are going to be the labs that kind of experiment with different ideas.
Not much of anything is happening in Congress these days.
Congressman John Garamendi was California's first elected insurance commissioner. For 25 years, he's advocated for a federal catastrophic insurance program.
However, that has not yet happened in Congress.
The way he sees it, it's up to the states to make a change first. But he thinks California's insurance commissioner, Ricardo Lara's plan, will hand too much power to the industry he's elected to regulate.
It appears to me that power inherent in the office of the insurance commissioner is not used. Now the insurance companies say, let us have our way, let us determine the price, let us determine the risk. Now if I were a commissioner, I'd say, interesting. You can say that, but you're damn well going to show the world those numbers. You're going to justify it.
So what is the insurance commissioner doing to help Californians? California Insurance Commissioner Ricardo Lara is leading the biggest overhaul to the state's insurance market in 35 years, called the Sustainable Insurance Strategy. The three main goals include expediting the state's rate approval process, which was put in place by Prop 103. It can take more than a year for companies to get approval. The ability to use forward-looking catastrophe modeling and get people off the California FAIR Plan.
With the reforms that we're proposing, I'm very confident that we're going to see some real change coming mid-2025. We're going to see that California is back open for business.
What guarantee do you have from insurance companies that your changes will actually bring them back to California?
We've crafted these regulations along with their advice. We've had several town halls. We've communicated with them, we've talked to them.
One key component of Lara's strategy is adding forward-looking catastrophe modeling. Right now, insurance companies doing business in California can only use historical data.
Insurance companies are going to be able to use some technology that they've been wanting to use for so long. And we are actually one of the only states that prevent insurance companies from being able to forecast these future events. We need this technology to help better inform how we build, where we build, and give consumers that information so they can make the best decisions.
Another goal of Lara's strategy is getting people off the FAIR Plan, the state's insurer of last resort, which is taking on more and more risk.
The FAIR Plan is very limited in coverage and 3 times as much more expensive for smaller coverage. That is not okay. Everybody wants to get out of the FAIR Plan, and I hear them every day. We want to get them back into the admitted market, and that is what our plan does. This is why it's such a historic agreement, because we get insurance companies to agree to come back and write 85% of their business in the WUI, in the wildland urban interface, and in these wildfire distress areas.
But the group Consumer Watchdog says this plan has loopholes, arguing companies could offer less and charge more. Denny Ritter, who lobbies for insurance companies, says getting insurers back into the state depends largely on 2 things: how quickly the department can implement new regulations and insurers' finances.
It really comes down to a company-by-company decision. For those insurers who are in a fiscally more challenging position, the hope would be that these reforms allow them to maintain and eventually grow.
How does the Sustainable Insurance Strategy guarantee that prices will stabilize again?
Once we get the insurance companies to come back into California, expand, you're going to create that natural market flow to be able to bring down the cost for everybody.
Are you on track to have the Sustainable Insurance Strategy in place by the end of the year, and what still needs to be done?
Yes, we are absolutely on track. We committed to the governor and the legislature, and most importantly to the consumers of California, that I was going to get all this done by the end of the year in December, and not only that, but be ready to accept new rate files January 1.
I spoke to Congressman John Garamendi, and he has been critical of the sustainable insurance strategy. He believes that it gives too much regulatory power to the insurance companies and not enough protections and transparency to consumers. What is your response to that?
Well, I think it's really fascinating when you Monday morning quarterback. What I'm doing is playing catch up for years of other insurance commissioners not having the courage to make these reforms.
While there is not one fix to the crisis, we hope our reporting helped answer your questions and better understand how we got here. We appreciate those who have reached out to share your stories. And if you have been dropped by your insurance company, we have a list of resources for you on abc10.com. And you can also email the team at to-the-point-ott-kxtv.com. I'm Alex Bell. Thank you so much for watching. To the Point does not end here. You can stream the show at a time that works for you right here on the ABC 10 Plus app.